Hi everyone, I hope you're all doing well, and today I'm talking about 5 UK stocks that I bought on Monday. Very rough day out there, a bit of a bloodbath, especially on the UK market, but even some of that ended up going into the US market and we saw some decent opportunities. So I will touch on the US market in general to start off with, and then I'll move on to the UK market because I know you guys like to hear my opinion on both of them right now. But as always guys, if you can just smash the like button. At the moment YouTube's been a little bit crap at putting the videos out. The algorithm's kind of just messed up a little bit over the last 2 weeks. And it's really starting to show on the videos. So if you could just like the video, maybe drop a comment, it really does help it get back out there and get it back onto the YouTube algorithm. But thank you so much for doing that, and we'll get stuck onto the video. So yeah, I did buy 5 UK stocks this week. US obviously took a bit of a bloodbath as well, not as much as the UK side of it. US, obviously we're still at compared to the UK, we're starting to push COVID lows, whereas the US we're still doing not too bad at the moment. And I get asked quite a bit about US growth companies, tech companies, my opinion on them. And sure, they're starting to get to a bit more of an attractive value, but they're nothing crazy. You know, nothing like what we were in March, April, May time, where there was some decent bargains out there. They're starting to get a little bit better, where you can look at them now and go, yeah, I can see myself making a bit of money on this one now, compared to where we were at a month, 2 months ago. But I still think the best opportunities out there in the US market is kind of small to mid cap stocks. Some of them are still at decent valuations and pull back quite a bit. So they are getting better valuations in the US, but not just exactly amazing for me right now. The UK side of it, a lot more interesting in my opinion. Now obviously it's going to be a bit slower compared to the US because of the amount of money that's being pumped into the US, and also in general the US is a bit more attracted to international investors. There's a lot more growth in the economy. On the UK side of it, obviously we've got Brexit going on as well as the CV, which is obviously taking effect on the stock market. Obviously our government aren't pumping in as much money into the market, which is another thing. And also our media in general is just really negative. I don't know what's going on with the media, but I do kind of know what's going on. They're just so negative. Every time, I think there was an interview the other day with a guy, I forget his name, that always comes out the health advisor and says stuff. And he was the worst case scenario is that we're going to be having 50,000 new cases a day in October. And every headline went with 50,000 cases heading in October. They just took the worst number and dumped it straight on. They didn't put worst case scenario on it. They just went straight for the big number. And it's one of those, they're just so negative. And it's taken the stock market down in the UK side of it in general. And yeah, we're starting to see a lot of stocks go down to COVID lows for me, which is kind of a little bit crazy because I think what kind of situation were we at compared to March? Well, in March we had no idea how long this was going to go on for really. A lot of companies stopped operating because we're down in a full lockdown, so there wasn't income coming into a lot of these companies. And now, even though a lot of these companies aren't at full capacity, they've got enough income to try and not take as much debt on. We kind of know what the situation a bit more with the CV side of it. Even though the cases are rising at the moment, the deaths, obviously every single death is a death that we don't want, but the deaths compared to what they were in March time were a lot more controlled because we've got a little bit more knowledge about what's going on. And I don't want to get too political on the channel and everything like that, but we are in a better situation than what we were in March. So to see a lot of stock prices now at the point of where they were in March or even lower is kind of saying to me right now that this is a decent opportunity that we do have out there right now. And in general, there's a lot of stocks that I could have bought this week. There was a lot of stocks tempting me. I tried to stay away from the travel and tourism stocks because I believe that they will probably go down a little bit more in the future when we hear about towards October time and what goes on there. Maybe that news, because a lot of them were planning October holidays and stuff like that. I think that a lot of them might get cancelled now. That might pull stocks down. I think we more than likely might have a 2-week lockdown in October as well. So obviously, I think in general the UK market is going to be a very bumpy ride over the next few months. Until past probably October time. So I think the next 2 months are going to be very bumpy. So if you are investing into stocks, make sure you know your stocks, guys, because there's going to be a few days where you look at them stocks and you're going to go, that's down quite a bit. So I think it's going to be a very, very bumpy ride. So just be careful of that. But if you've got confidence in your company, you think, where's that company going to be in 2 to 5 years? If we're going to be in this COVID situation, Don't get stuck, into that short-term mentality. Try and think about that long-term and where some of these companies are going to be in 2 to 5 years. I think you'll probably look back in 2 to 5 years' time in some of these stocks you start buying and go, I did a really good thing buying into them companies at them sort of prices. So if you do want to keep up to date with the stocks that I am buying, guys, join my patrons group. I always post on there when I'm buying, when I'm selling my stocks, but I'll take you through the 5 stocks that I did buy this week. So I'm going to spend about 2 to 3 minutes on these companies just to get through them. Otherwise, this video is going to end up being about 800 days long. So I'm going to just fire through these 2 to 3 minutes. If you want my full case on a lot of these companies, I've got quite a lot of full in-depth videos on it, especially with this one, number one, Greggs. I've got plenty of videos talking about these guys on here, and I know if you guys were commenting down on my videos the last couple of days talking about what I was doing with Greggs, and normally if I'm quite quiet on the channel, it's because I'm out there looking at companies and I'm buying them. And Greggs was one of those. Now Greggs, for me, obviously we've just got to the point where we've actually dipped to the lowest point now. We're down past COVID lows, which is insane to me for a company like this, because I believe that this company now at these sort of prices offers 200% upside in the next 5 years, which is really good, risk to reward. I think, when we're buying this company, we're buying a company with a fantastic balance sheet, fantastic growth, fantastic management, and we're at the point below COVID lows, and this company is operating again, and they're doing okay. I think they could get to break even by the time the next earnings reports come out, and that's all we want from Greggs. And I said Beggs then, but Greggs, yeah, that's all we want from Greggs is just them to get to break even, so that they're able to manage the cash, not take on debt, everything's fine. And then we look to 2021. That's all we're looking for a lot of these companies. It's a write-off year. Just get to break even. And Greggs were really close on the last earnings, especially on the last 5 weeks into Q3. They were very close to break even, and I think they probably have got to break even. And that's all we want. And now we've got this company at really, really low prices. And I bought some more, but there's a chance by the time this video goes up I might have even bought some more, because at these sort of prices, I think Greggs is a massive bargain. Number 2 was Hollywood Bowl, and this is my 3rd biggest position in my UK portfolio, and I want to make sure it stays that way, so I wanted to buy some more, and to get it at these sort of valuations was pretty happy for me. Once again, fantastic management, fantastic growth, good balance sheet going into COVID, and once again, I think there's 200% upside at these prices over the next 2 to 5 years. And the only risk I have with this one that I see is that it could be one of the, if we do go into a more big of a lockdown, this could be the leisure industry could be one of the big ones that, kind of gets, told to shut up shop for a little bit. So this one could be one of the first ones. But from what I've seen, and on my patrons group, we were talking about this, is that all the Hollywood Bowls that I have seen so far have been pretty busy. And like I say, I think I'm a big fan of this one. Great company before COVID. You look at the share price and how well it's done, and just look at the growth that it's been knocked off of this company. In fact, Hollywood Bowl, even though it's my 3rd biggest position, is one of the companies that I would be very happy to have as my biggest position. So same again, it's a company that if this carries on, I'll be buying more of. Number 3 was Card Factory, and this stock is since 2015 in fact has just been down absolutely huge, and yeah, we're at some really cheap prices now for this company, and I think it's really disrespected because overall the company is profitable, or profitable pre-COVID that is, and it wasn't an amazing balance sheet. The management team kind of killed it, and it wasn't growing profitability, but it was still profitable, and the revenue was still growing on it. And now Card Factory is growing a lot of its online business. We've seen online growth nearly 70% on this company, which is great. It's got its new deal with the Reject store in Australia, which it's now selling cards in another 350 stores. So for the share price to be down pretty much from 2015, 90%, I can't see this one going much longer, because we've got the Christmas rush coming in. It's got its new Reject store deal. It's got online growth. And for me, even though I don't ever see it going back to where it was in 2015 prices, but just, it's about 35 now. I see this going to, being in the $100 range at some point, and I just think it's massively sold off. So number 4, number 5 are house builder stocks, which I think house builder stocks in general, we need houses. in the UK, and these guys are still operating. From what I've seen, there was an article from Rightmove saying that their house sales are strong, like the strongest they've been for like years. And I see that on the street, like going around. The 5 houses went up for sale on my street. All of them have sold in the last like 5 weeks of going up, which is, you know, fantastic. And I know that's not new houses, but all I see from the house market is that it's still really strong and getting disrespected right now. Taylor Wimpey, fantastic company going into COVID, growth, balance sheet. And yeah, it's another company that's broken below its pre-COVID lows. And I think that at these sort of prices, it's an easy pickup. Once again, I'd say there's a massive upside in this company buying at these sort of prices. And my last one is Gleeson. And another house builder, like I said, just like Taylor Wimpey. This one's a bit more focused to like working class families. That's why I like this one. It's a bit smaller. It's got a lot more growth, and it's not. The share price on this one is back at like 2018 prices, kind of 2017 prices. So it's, you know, it's not dropped as much as like the other house builder stocks, because I think just because of it's smaller, it's easy for it to manage the COVID situation. It's got a lot more growth than the other ones. So like I say, it hasn't dropped as much as the other house builder stocks, but I really like this one. A different play to Taylor Wimpey because of where it's at, and like I said, the house builder stocks in general just massively sold off. So guys, those are the 5 UK stocks that I bought this week, and like I say, if you want a bit more detail about these, I've got full videos on my channel somewhere about these companies, but those are 5 that I did buy, and like I say, there's potential that I do go buy a few more this week. I'll see what happens. Definitely like the Greggs kind of side of it, the Hollywood Bowl side of it. Maybe even if Dark Group gets the right prices, I might add some more in there. But definitely like Greggs and Hollywood Bowl are the 2 that I'm like looking at and thinking, these are 2 companies that I really like, that are really cheap right now. So it's hard for me to like resist it, you know. But we'll see what happens. If I do buy, I will update you guys. But yeah, those are 5 companies that I did buy this week, guys. I hope you enjoyed it. As always, subscribe if you're new around here. If you're always around here, make sure you smash the like button. And I'll see you next video.